What is going on, guys? Apologies. My internet is down and it's really annoying me this morning. Um, I'm streaming off of my phone, so this is going off of 5G. I don't know if it will do, but we'll try it until it doesn't. Can you guys hear me? Hopefully you guys can hear me. Can you guys hear me? All right. Yeah, I apologize. So this is I'm right now live streaming off of my phone. I have it tethered. Hopefully it doesn't lag. I'm gonna try not to open up too many apps, but let's check on what's going on. Let's check on what's going on with CNBC. Hopefully this doesn't break the connection.
The last time we had something along those lines was from October of 89 to April of 90, where it was 9 in a row. So we stopped that as well. And up 0.2 on the core is the lowest level going all the way back to February of 21, when it was only up 1/10. And if we look at year over year, up 3%. 4% in the rear view mirror. Well, 4% in the rear view mirror was the lowest level since March of 21. So when you see 3%, you have to go all the way back to March of 21 again, because that's where the comp drops from down to 2.6 is what we're comping to. And in the rear view mirror, 4%. And here's another one. If you look at X Food and Energy, last month it was up 5.3. That was the lowest level since Nova of 2021. We breached 5% to 4.8. 4.8, and that remains at the lowest level since October of 21, when it was 4.6. We could see that interest rates have fallen about 3 basis points in tens, from 393 to 390. We see that the pre-opening equity markets have rocketed higher. Dow futures up basically 200. And of course, we are going to monitor if there's any changes in Fed fund futures. I don't think so. At 10 o'clock Eastern, look for Bank of Canada to go 1/4 point to 5%. Dollar index, prior to this number, of course, was at a 2-month low. My guess is it's not rallying at this point, and we're all going to pay attention to the UAW. You know, wages are a big issue, as we learned last Friday, and UAW and strikes and minimum wages across the country. All of those things may be good for many people, but there's very little doubt that they also fuel some wage inflation. We need to pay very close attention to that. Joe, all yours.
So no change in, so Bookvar was on. He said they're going in July no matter what. No change in that probability?
Well, it's dropped a little bit, and it's slow moving right now in the futures, but we've gone from basically 88, 89%, where it's been hovering for pretty much since the non-farm numbers. We lopped off a couple of percent to maybe 86%. And Joe, you know, I have cheeseburgers bet with Steve Leisman, and I really don't think they ought to go, but it's very hard for me to think that they're going to be dropping that 86% anytime soon. They seem to always like to make sure the market and the Federal Reserve voting panel are in sync, as they seem to be. I think the real issue is September. I don't think they'll go in September, and I think a year from September, they'll regret going in July.
So where should Fed funds be? What should we assume about core? It's in a downward trend, and then how much should we add on core to get to the Fed funds? Where should they be? Given what we just heard today, what's the number where they should feel comfortable with, where, you know, where if you don't have to put people out of work, it would be nice. If you don't have to put people,
it's a moving target.
Yeah, it is. Okay. So, but approximately.
It's a moving target. So, you know, let's look at where CPI core has been, okay? So it peaked in what? June of 2022 at 9.1%. So it went 9.1, 85, 83, 82, 77, 71. And decent 22, it dropped under 7% to 6.5, then 6.4, 6%, 5%, 4.9, 4%, and now 3%. So we could see, I'm sorry, that wasn't core. That was year over year. If you look at core, that's been much stickier. It was 6.6% in September of last year, Joe. That was a high water mark back to 82. I'll do those too. So we've gone from 6.6 to 6.3, 6.0, 5.7, 5.6, 5.5, and the fly in the ointment was, if you remember, last February, this February of 23, we went from 5.5 to 5.6 in March. That uptick really made the markets nervous, then 5.5, 5.3, and now 4.8. Why did I do all that? Because I think that over a year, over the next 12 months, we're going to get it down very close to the Fed's target, 2, maybe 2.5%. But I don't think it's going to get there in the next several plus months. And that's the rub. So when you ask me where Fed fund futures need to be, if they're taking the tack that they need to control it immediately and see the drop immediately, they're going to have to go 2 or 3 more, in my opinion, higher than they.
All right, guys. So you heard it there. Even the core came in lower than expected, right? So core came in at 4.8 versus 5%. CPI came in at 3% versus 3.1. And then here you see the month over month numbers. So came in lower than expected. Now, I did expect it to come in at least in line. It is kind of a surprise that it came in lower than expected, by 0.1%. But yeah, I did expect it to come in line. And yesterday, if you saw on my Twitter, I had tweeted, and I put this out in the Academy as well. I basically tweeted out that there was a huge bet that came in right before market close. It was this right here. Let me pull it up for you. But I was basically saying that $1 million worth of QQQ 370 calls were bought above the ask before market close today, expiring tomorrow. So these these calls expired today. So they're essentially just 1-day calls that expired today. And there was 12,500 of them. Now, before this came in, that strike price, which was the 370 strike, only had open interest of 6,900. So it was double the open interest on one order, right? For QQQ 370 calls. And we've seen this before where, either they're just bets or somebody knows something, right? But yeah, are you guys happy with the results? Are you not? Let's take a look at the markets here. It looks like some of you guys look a little pissed at this number for some reason. I don't know why, honestly. When it comes to things like CPI or when it comes to the market ripping, a lot of people are, I don't know, they seem to get in their feelings for some reason. Don't you guys want the markets to go higher? I mean, I sure as hell want my portfolio to go higher, right? Like, why are people? It's so weird to me that people get pissed when this stuff happens. Like, why would you want your portfolio to go lower? That's what I don't get. I did not trade it. I like to let it play out. Yeah, you could certainly let it play out and then go from there. I mean, there's no way to trade this. Surf and Dragon, there's no way to trade this unless you took a bet, right? Which is basically you are betting on the direction of the market before the event happens, right? Here's the thing, though. In my view, I think that the market would have gone up anyway, right? But I think the extent of the rally would be determined by CPI. So if CPI came in slightly over, I do think the market would have still ended green. I mean, didn't we see this back in, was it February, right? It was February when CPI came in at 5.6 versus 5.3, I think, if I'm recalling correctly. And so, the market still, if I remember correctly, still ended slightly green. So I do think that the stocks, we are in a bull market, right? We're in a solidified bull market. So I do think that the stocks would have went green. I don't think that they'd be up, almost 1%. So NASDAQ is up 1%. S&P's up 0.75%. Dow Jones is up, looks like 0.2%, and the Russell's up 1.2%. And I do think that the Russell is actually going to see a resurgence for the summer. Like I do think there will be continue to be a rotation into small caps, right? I hold IWM, which is the ETF that tracks the Russell 2000. But if you take a look at the Russell, this is what I was saying before, that it looks like, all of the other indices got the memo. So Nasdaq is near very close to all-time highs. S&P is not super close to all-time highs, but it's not that far away. So on the S&P 500, we're only 7% away from all-time highs. The Nasdaq is only it's about the same. It's about 8% from all-time highs, right? But the Russell 2000 still lagging, but I do think there will be a rotation into small caps. The Russell 2000 is about 26% from all-time highs. So I do think that the Russell will rally a bit. The one trade that I did want to put on this morning was on ZT futures. I do think that this right here is potentially the bottom now. I don't think that ZT futures are going to rocket more are going to tank more, unless there is a black swan event where yields spike even more and then this tanks. But I did want to put a trade out on ZT futures if I wasn't having internet issues this morning. By the way, can you guys still hear me and see me okay? It looks like the stream is fine. I'm streaming off of my phone, which is nuts. I'm literally tethered to my phone's hotspot. That's how I'm streaming right now because my internet is still down. So yeah, and that's, by the way, this is why the lights don't work. So if it looks a little yellow in here, it's because the lights they're off of this app that I use for Elgato lights, and it needs Wi-Fi. Guys, there's like 600 of you here, and there's only 65 likes. We need more people to find this stream, so push that up. Hope you had a microphone. This is a microphone. Wait, you guys can't hear me? You should be able to hear me. So for those of you that are still joining, CPI came in lower than expected. We were expecting 3.1%. We came in at 3%. Core came in at 4.8 versus 5%. So that is the number that I think is actually causing the market to rocket so far this morning, is that core, which is the stickier version of inflation and the one that is more service oriented. That one was actually a lot stickier than hoped, and that was the one that wasn't going down. And even that one, we see that it has gone down. Let me address some of your questions. All right, let me see. And I really want to start my Thinkorswim, but that's such a heavy program, and I have so many programs open right now. I'm afraid it will slam the stream. So I'll still try. But let's see. Appreciate you, Anonymous, whoever donated that $5 to St. Jude's. Appreciate you. All right. Someone says 100% lotto if you play. Yeah, for sure. But we are long on Apple, by the way. We did take an Apple long. That is a pretty large position that I have. And right now, Apple is up pre-market. I will tell you why I took that Apple long. Where are my indicators? This is very interesting. All right. I'm not entirely sure why my indicators are not showing up. One second. Let me see if I do this. Settings. No. Yeah, settings and then template. I think, yeah, template. That is so weird. Okay. Anyway, I took an Apple long because Apple was at I'll just pull it up. 21 EMA. Wow, that is so ugly. I was just trying to show you guys something. So Apple was at the 21 EMA here, right? And if you notice, if you take a look at Apple's volume, God, I don't even have volume up. If you take a look at volume, here's what happens with Apple and why I went long on Apple. And it's up, oh my God, it's up $1.50, which if you guys know, that's a lot for Apple. But Apple tends to do this, right? And a lot of stocks tend to do this. And this is why one of the reasons that I bought Lucid, those calls are now up 350%. I wish I held on to the total position. I only had runners. But if you notice, all the way since the start of this bull market in January, right? Apple has these pops. And then look at the volume. The volume tapers off, right? And when the volume tapers off, you tend to see the price taper off, and the price tapers off, and this purple line is the 21 EMA. So, by the way, this doesn't just go for Apple. Anytime you see this where stocks rally and then taper off, take a look at the volume. And I don't trade by volume, by the way. So it's not like I'm day trading using volume. But when I do longer term analysis, I look at volume if I'm trying to determine whether a potential trend is still valid. So, on these pops, Apple will have really large volume. And then on the drops or the retracements, volume will taper off significantly from that initial pop. So you know that there aren't, the sellers aren't as violent as the buyers. And then you'll see it pop again. And these pops will come with above average volume, followed by tapered off volume, which leads to a retracement. And we saw this recently, right? We popped and Apple hit another all-time high of 194.5. And then on this retracement, you obviously see lower volume than this pop. So, it retraced the 21 EMA. So we went into bull put spreads on Apple, right? That is a vertical put spread where you're selling the vertical put spread and getting credit and, hoping that over time it expires worthless so that you get the entire credit. The more that Apple goes up, the more that those put spreads are worthless, meaning you sold them, so you want them to decay in value as fast as possible, right? So yeah, stream is perfect. Good audio and video. Thank you guys. Thank you guys. Thank you guys. All right. So someone said earnings and guidance will be the market mover. Richard says yes. Richard, definitely. Now we are on to earnings, right? Earnings season is about to kick off, especially for the mega caps, and that all eyes will be on earnings. Now, if earnings are decent, which we thought that they would be affected by rate hikes so far, but if earnings are decent, then obviously the market is going to continue higher. If you guys have watched this channel for a while now, you'll know that, let me just remove this ugly ass EMA here. If you guys have watched this channel for a while now, you know that I said, back here in March, we've been tracking this stuff. And I said that if the Fed does a pause, first it was the debt ceiling issue, right? So I said if the debt ceiling is resolved, 4,300 is my target for the SPX. And then if the Fed pauses in June, which they did, then I think we can go to 4,500. And we are hovering around. We didn't hit 4,500 just yet. It was like a few points shy of 4,500, but you can call it 4,500, right? And that's where we are hovering now. And if earnings season is good, I think the S&P is going to all-time highs. For sure. Richard says, I'm not pissed. I own stocks and I have calls, but I don't like being lied to. Okay. Richard, how are you going to resolve this? Right? Like, you're in the market, right? You are participating in the market. how do you know that, one, you're being lied to, aside from your own suspicion, right? And two, um, obviously, numbers are massaged in every aspect, whether it's corporate earnings, whether it's sales numbers, whether it's CPI. But think about this, right? For those of you conspiracy theorists that are like, oh, I'm being lied to. If you're being lied to, why wouldn't they just tell you? Why would they drag this out, right? Why would they drag this out for years? It's been over a year now that the Fed has been hiking rates. They started in March of 2022, right? So why would they continue to drag it out for over a year? Why wouldn't they just tell you in a month that inflation is done and we're good? If you're truly being lied to, right? So take it with a grain of salt. Sure, you don't have to say like, oh, I believe the Fed's numbers wholeheartedly. But assuming that there is some massaging of data. But if you were being lied to entirely, they would just tell you inflation doesn't exist, right? So why would they tell you, for instance, that inflation is at 9.5%? Could it be slightly higher? Sure, it could be slightly higher than 9.5%. But think about this. I mean, why do you think you're being lied to in one direction, right? Like, wouldn't you think that if there is a lie, that there would be a lie to bring the market down so that, you know, institutions and people with huge portfolios can buy in the market cheaper? Why do you think you're being lied to in just one direction? And how does that serve you as an investor? At the end of the day, you can only work with the data that you're given, right? You can only work with the data that you're given, and based on that data, you make assumptions. You make trades, you make investments. So I don't know what's the point of screaming conspiracy here. This is a good time to take profits and have cash on the sidelines for the downturn. More wave. I would agree if there was more uncertainty. I don't think we have that level of uncertainty. So if you recall back in February, right, when we were at 4,200, I said, I'm not sure. And that was when CPI had ticked up. Remember, it went higher than expected. I said, I'm uncertain. I'm not bullish. I'm not bearish. I'm uncertain. But once we hit a bull market, I know how the U.S. stock market works. We don't hit a bull market and then regress back to a bear market. That just doesn't happen. It happened one time since World War II, right? Could it happen now? Sure. Could there be a black swan? Yes, of course. We can't tell the future. That's what makes it a black swan. But once you're in a bull market in the United States, the track record is pretty clear that the bull market wants to continue, right? So if you're going to try to time it here, like what if earnings are good and the market just continues up to all-time highs? I don't know. I think that if you bought low enough, you can continue to hold and then dollar cost average if it drops. Now, obviously, I'm not telling anyone to do anything. Do what you like. But if you think that you're somehow going to time the market in a bull market, I wouldn't bet on your side. Mark Cares says, because they sold calls and are afraid to lose with the money on the table. Well, you know what's so funny, Mark, is I think that a lot of people bought puts more than sold calls. I think the average retail person who is screaming doom and gloom or has been, they're not sophisticated enough to sell calls and then be worried about it, right? Because even if you sold calls, you're selling calls at hopefully a more advantageous price, meaning that if you get assigned, you are actually in profit, right? Um, I think what most people did is they probably bought puts. Now, I do think that those people have since mostly closed their positions because I'm looking at the put call ratios and they are at, historic lows, meaning that that people that had puts open significantly closed them already. So, do we need to raise again? I don't think it's necessary for now, Conscious Investing says. The plane is landing pretty smoothly thus far. Yes, they will raise again for sure. Trust me, they will raise again. They're going to do it in July. That is the funny thing, conscious investing is I was thinking about this yesterday. By the way, guys, hit that like button. There's over 600 of you here. Let others find the stream. I do think that they will raise again. And I was thinking about this yesterday. I'm like, why would they have to raise again? If inflation is coming down, right? There has to be an agenda there somewhere. Because if you were the Fed and inflation is now 3% and your target is 2%, clearly the rate hikes are working. So what are you trying to do? Are you trying to get to 2% immediately, which never happens unless you slam the economy, right? This is what I was thinking about. Is like if you're the Fed and inflation is now at 3% and your target is 2%, do you really need another rate hike, or can you afford to just hold for a second? And if you're being prudent, you can afford to hold, in my view. But there has to be an agenda somewhere because they keep harping on this rate hike. And I'm not sure what that is, right? I personally think, honestly, conscious investing, and apologies for not knowing your real name, but to be fair, you didn't tell it to me. What I think it is I think they want to crush the employment market. That's what I think. I think they're trying to get more people laid off. That's what I think it is. And once the employment numbers start ticking up, then I think they'll start to be satisfied, because I agree with you. What was the ETF that tracked the Russell? IWM. Hey Z, thoughts on Mara calls? My thoughts are, I'm assuming you're too late. Those are my thoughts. If you're thinking about Mara calls now, when someone asks a question like that, thoughts about buying calls on this, could it be because Mara is up 470% since January? Come on, man. $4.8 is core. Yeah, but guess what, Jack? Historically, the Fed has always paused, right? Let me see if I can find this real quick. Here. Historically, the Fed has always paused when the Fed funds rate was above core, and we are now above core. Last time around, we were not above core, but the Fed funds rate right now is between 5 and 5.25, right? Because it's always a range. And core CPI came in at 4.8. So historically, the Fed pauses when CPI is above both. And we are above both. So the only thing that rate hikes serve at the moment is to raise unemployment. May Jordan, good morning, everyone. Good morning, May, or my apologies, depending on how you pronounce that. They're going to raise until unemployment ticks up. Yes, Josh, yes. Just give us 50 basis points, rip the Band-Aid off. I mean, what Band-Aid? Rip the Band-Aid off means that, that they're still fighting a huge problem. If inflation is 3%, then it's not ripped the Band-Aid off anymore. The Quran traveler can't hear you. Sounds like a personal issue. If you're scared, go to church. Thanks for the live stream. I had a truly amazing week. I day traded with 6,400 and turned it into 400K. Sounds like nearly perfect. Sounds like you're selling something. Rush Rap TV. Hi Z, in the liquidity method you teach, is it important to have the liquidity grab criteria? Oh, speaking of which, and let me finish your question and then I'll go into my thought. In the liquidity method you teach, is it important to have the liquidity grab criteria occur at a key level? What time frame levels you consider key levels? Not sure what you mean. Is it important? Yeah, obviously it's a key level, or else how could you determine that liquidity is taken, right? But when you're looking at a liquidity grab, for instance, before the market started rocketing, right? This right here would be considered. This right here would be considered liquidity, right? Now, obviously, this was before a news drop. So once the inflation numbers came out, the market started rocketing. But let's just assume there wasn't a news drop. And this comes out like this. Then you would be waiting here to see if we start trending down. Because once liquidity is taken on one end, right, the natural cycle of events is that it wants to go and find the other side, right? So once liquidity is taken on one side, then you expect it at some point to take liquidity down here on the other side. And that every single day is just a cycle of taking liquidity at different ends. Daniel Neighbors donated to St. Jude's. Appreciate you, Daniel. Thank you so much. Blinky says, now I can wear the same hat. Yes, Blinky won a hat last time. Anonymous donated 5 pounds to St. Jude's. Appreciate you, whoever that was. Thank you so much. Vanguard bought 560 million in Riot and Mara yesterday. Yeah, but does that mean that you should buy inflated calls? Like the price of calls on Mara is probably so high right now that if you are wrong, or if the price tanks just a little bit or doesn't rocket, you're going to lose a lot of premium. If anything, buy call spreads, okay? Buy vertical call spreads. If anything, do not buy naked calls on this, because they are likely very expensive. And if you get, like say you get a period in Mara that looks like this and you have calls, you will get absolutely spanked. You will get absolutely spanked, right? Or even a period like this. You will get absolutely spanked. Right now, it's rocketing up, right? So calls are the most expensive way to get into Mara. If you say, I want to buy Mara shares, sure, okay, fine. But I would much rather play call spreads here than try to buy Mara naked calls. Sounds like he's lying. Who are you guys talking about? This guy? Let's see. Oh, Kramer?
From West Virginia, for all the different natural gas liquids, for LNG, it's insane. So they have to. Some of these projects can't be stopped by the Fed, but the wage inflation is just going to be enormous. So I don't think it's wrong. I think Jamie Dimon has made some points today when he talks about having to go up. But it all has to do not with what we're seeing in the CPI, but what could be in the pipe for next year, given the fact that there's going to be such wage inflation caused by the federal government.
Jim mentions Dimon's comments to The Economist, talked about a bunch of different areas, bank mergers, but clearly his ongoing belief that the Fed does have more wood to chop. Take a listen.
We've never had quantitative easing like this before. We've never had quantitative tightening before. I think the effects of that in the market may be more serious than other people think.
And you think the Fed is going to have to tighten more than people maybe expect?
I think there's a good chance of that, yes.
So that leads to his longstanding view. I mean, he was early in talking about sixes.
Yes, he has. He did it with me when he was in Philadelphia. How are you going to get a bye-bye baby registered cashier person to learn how to spot weld at a liquefied natural gas plant like the two that are coming? How do you get the people who are being laid off at Party City engaged in how to make a windmill in Kentucky? I just don't. The job mismatch is so bad in this country that the Fed has to take notice that the whole re-education of the workforce is going to cost a lot of money.
So you're talking about job mobility, in other words,
exactly.
Right? We haven't heard Powell sort of decry this industrial policy. We hasn't come out and said, look, guys, we're trying to do something over here. You're working against us.
Well, I think the money's already it's going to the states. The states, if you take a look at what a Jacobs is saying, a big general contractor, AECOM, they do the actual building, and it's just humongous. And it's all concentrated. You know, Micron's trying to find, they say 2,000 people to build $100 billion worth of plants in the middle of New York. Well, the middle of New York has not produced those kinds of workers since General Electric was founded. So the mismatch has got to be noticed by Powell soon. And he has to just say, look, one of the reasons that we are concerned is because as that money is being put to work, which is right now, we can't find the workers.
So you heard Jamie Dimon there was saying that, you know, we think that the Fed needs to tighten some more. This is what I was saying earlier, is that, you know, it seems like there's an agenda to want to keep pushing this thing up until unemployment and wage inflation or unemployment, until unemployment goes up and wages go down. Is there an agenda there? I mean, it could be, right? It could be that corporations are complaining behind closed doors that, hey, you know, it's costing a lot to hire these workers, et cetera, et cetera. We need wages to go down in general, right? Like, at the end of the day, this is the U.S. and it's built on sort of this hyper capitalism philosophy, right? So, you know, if Jamie Dimon is saying we need, you know, the Fed needs to tighten some more. If inflation came down to 3%, now you guys, I don't think you know just how tight inflation is, right? How sticky, inflation can be. So I tweeted this yesterday and I said, by the way, follow me on Twitter. I post a ton of free daily finance and trading content, okay? Well as funny shit like this. Here's what I said. Inflation is expected to come in at 3.1% tomorrow. Would be historic if we actually meet or beat. In 1982, inflation was 6.2%. It wasn't until 1986 that we got back to 2%, right? So it took 4 years to go from 6 to 2. In 1990, inflation was 5.4%. It wasn't until 94 that we got to near 2%. Another 4 years to go from 5 to 2. Once you're dealing in these low digits, in these low single digits, then inflation is so sticky and it's so hard to bring it back down to 2%. So if we already went from 9% last year to 3% this year, you know, what is the pressure on the Fed to keep tightening? And by the way, I'm not saying I agree or disagree per se. I'm just saying that there really seems to be this agenda that regardless of what, they want unemployment to go up, right? I think this is a pump and dump today, Hustle Smart says. We've seen this in the market, Hustle Smart. Like, we've seen the initial reaction not be the final one, right? So if the market like pumps pre-market on good news, then it'll, you know, we've seen it dump later in the day or vice versa. Can you adjust the volume gain on your mark? You were quiet to previous streams. Really? Let me see. Maybe, I don't know. Hopefully I'm not clipping in your ears right now. It shows that I'm clipping right now, but yeah, but will Bidenomics let that happen? Well, this is the dichotomy between government and the Federal Reserve, right? That it was better before. Fuck you, gunmetal. Jesus. I know him personally, by the way. Guys, don't get your panties in a bunch. He's one of the admins on the Discord as well. So all right, sorry. You guys can blame gunmetal. Don't blame me. All right, let's take a look at the markets real quick. So on ES, there you go. I know sound hitting 8 dB. Bro, it might be hitting 8 dB on your end. And I hope you mean minus 8 dB. It might be hitting 8 dB on your end. On my end, it's like fucking 1800. All right. I'm so reluctant to open my Thinkorswim right now because I'm tethered off of my phone's internet. Let me see 1 second, actually. Oh, I got a green light. Let me test this. I need to test this on another device before I switch and lose the stream. 1 second. I'm gonna leave you with this genius here for a second. 1 second.
Interesting.
And then we'll do some.
I went to see it because I used to.
And then we'll do some trading, hopefully, because I think they fixed the internet. So 1 second.
But we're in the formative phase of building all these, and we don't have enough.
Yeah,
we just don't have enough people.
I think viewers get your where you're going on wage pressure, but I mean, Adobe online prices are in deflation. Amazon, now we're paying very close attention to what Prime's going to do yesterday and today.
It was a little scary to get everything that I had bought in the last 6 months down 50%. I just bought everything. What the heck? I'm like David. I bought all the stuff that I bought for David, too. I'm saying that, yes, this list, I mean, yes, cupcakes, they didn't come in like I'd like them to. This list is all good. This is the Fed winning. I'm just cautioning people that we're going to have another kind of inflation that if they're not thinking about, they have to go do the work like I do, which is tedious. It's tedious to see how many people it takes to do a heavy sheet mill in Decatur, Alabama. Yep. But that's where the inflation is going to be.
We'll see if it's a pocket or if it's broad.
And that's everything. Yeah. That's everything.
Right. When we come back, big news, as you know by now, on the Microsoft Activision deal after that merger's legal victory over the FTC. Take a look at the pre-market here. A bunch of calls to get to, including Cisco and DraftKings and Stellantis, JP Morgan, Ford, GM. On a big day for cooling inflation. More Squawk on the Street straight ahead.
All right. It looks like internet is back up. So here's what I'm going to try and do. I'm going to try, for better or for worse, to switch my internet connection right now. Okay? So bear with me. If it cuts out for just a second, don't flame me. If it cuts out for just a second, don't flame me, okay? It will be back up. I will reconnect in 1 second, okay? So hold on. And hopefully we can get some lights in here because it looks like I'm in a fucking dark room. All right, 1 second. Did I lose you guys? Or can you guys hear me? Yeah. All right, we got internet back up. Fuck. All right, let me see if I can get lights now. Oh, shit. Too bright. I look like Casper. Dope. All right. Now let me see if I can log in real quick. I don't like that you guys aren't excited that we have internet back. This is amazing. Okay. Meta breaking big 300. Yeah, we're going to take a look at some trades right now.
Yeah.
Microsoft and Activision aiming to close their merger deal next week after that.
All right. It's a World Wide Web. Oh, what's going on, Evan? Kevin says, yeah, internet. What up from Miami? What's going on, Isabello? All right. Finally. Let me pull up. My Thinkorswim. Bear with me, bear with me, bear with me. All right. So, I don't want to hear Kramer. All right. So right now the S&P pre-market is up. The market opens in 23 minutes, right? So we're up 0.90. NASDAQ is up 1.09. And the Russell's up almost 2%. Now, some days the Russell actually provides much cleaner trading than the other indices, and some days it doesn't, right? But I always check on the Russell because you can trade Russell futures, by the way. Russell futures, it's called RTY, right? Just like S&P futures is ES, NASDAQ futures is NQ. VIX is down almost 6%. The dollar is down 0.2%. The 10-year down almost 2%, not 2 percentage points. I wish, because that would make mortgages cheaper for everybody. But 2% on the day, right? So far. So yeah, the one trade that I was looking at that I was hoping to put in this morning, because I figured that CPI would come at least in line, was buying the 2-year futures. So I plan on buying this on a pullback. Here's the thing, though. If we get a black swan event, or if the Fed is more aggressive and promises 2 more rate hikes, we could drop back on this. But I believe that we are at support now for the 2-year futures. Now, this is absolutely going to rocket once the Fed actually cuts, right? When the Fed does a cut, this actually is going to rocket. All right, cool. Opens up in 13 minutes. Sorry, 13, not 23. Yes. Tony Hill from the Navajo Nation. What's going on, Tony? Wagwan, Miles Carter says. Wow, he says Wagwan Habibi. Those are 2 very distinct languages. You speak Jamaican patois and Arabic. That's a very unique combo. All right. So here's what I'm looking at on the ES, the S&P futures, right? Obviously, we are now at levels. We've broken all previous levels, right? In recent days, I mean, because this is the 5-minute chart. So we've broken all the previous days levels. So you have to go back far enough in order to contextualize what's going on here, right? So back from Hawaii already? Yes, unfortunately. But I want to move there. I'm not even kidding. I want to move to Hawaii. Kauai specifically. I'm looking at something there. I'm not even joking. Anyway, that's not important right now. Mr. DeBiz. You see Lucid drop on deliveries? Yeah, thank God we sold. Well, not thank God. We actually missed out on quite a bit of upside. I think I sold most of my full position near 100% on Lucid, and those went up to 350%, but I only had runners at that point. Anyway, stop talking about Hawaii. Let's focus on that. So in order to contextualize what's going on here, right? This is all like the previous days because this is the 5-minute chart. You have to contextualize what's going on, meaning I want to know what these levels represent, right? So I will zoom out on my chart and go to the higher time frames to get more information in each candle and see where we are at, right? So if you look at June 16th, and we also have June 30th, we clearly have a level here of equal high. Whoops. We clearly have a level here of equal highs that we are now up above, right? So almost a month-long level that the S&P 500 was at, we are now breaking above this, okay? This is significant. Why? Well, because if we get a retracement down, we want to see if this level holds, right? You can also potentially trade. You could potentially trade these levels down. Okay, computer, what time Powell? What are you talking about? What time Powell what? Eats lunch? Sitting at the desk now? Who's sitting at the desk? What are you guys talking about? You guys are speaking in code. So on S&P 500, we broke the level from June 18th, right? Now, what is this? If we zoom back even more, what does this represent? We are now at levels that we saw in April 2022. My view is that, and by the way, do you guys know? Well, April 2022, hold on. August 2022 is when inflation had peaked, right? The July inflation came in at 9, and then August shows that we came in at 8. So it was like a drop off from the 9, and there was chatter that inflation was peaking. So right now, if inflation is at 3%, I do think that these highs here from April 2022 are in target, right? So this took us to 4,600. We are coming up on earnings season. If earnings do not disappoint, right? They don't even have to be great. If they do not disappoint, that will further tell the story of the soft landing, right? We are now at 3% inflation, unemployment is still low, and earnings are decent. I think that 4,600 is in sight for sure. Anyway, in the short term, this right here is a very, very bullish pattern, right? You can call this Adam and Eve, cup and handle, whatever you want to call it. It doesn't matter. When you see these sort of formations, these rounding bottom formations, this is accumulation. And when you see these accumulation patterns at the top, that is super bullish because you tend to see these accumulation patterns at the bottom, right? Which means that buyers are now coming in supporting this thing that you're looking at. When you see accumulation patterns at the top, this likely means that there's a lot of FOMO buying, usually large institutional FOMO buying happening here at the top, which we know is the case because we know that money managers and whatnot, they were all bearish. Like historically on CNBC, you've seen this all year where money managers will come in and say, oh, you know, we are still in cash. We're playing defensive. We're nibbling on a few names, right? And then the market rally started and they all started dumping stocks in the market, right? Okay, computer says what time Powell? Bro, Powell is not talking today. Today's CPI day, not FOMC. And CPI, for those of you just joining us, CPI came in at 3% versus 3.1 expected. And core came in at 4.8 versus 5 expected. So much better than expected. Could we see a retracement? Yeah. I mean, when do you not see a retracement? Thoughts on NVIDIA. Ask me a more specific question, Happy Boy, instead of thoughts. Thoughts on what? On their chip? Thoughts on their cash flow? Thoughts on what? Options? We do have some Fed members talking. Conscious Investing says. Well, let me check what our coach put in the Discord because she actually announces this stuff. So today we have CPI core, okay, at 9:45 a.m. Eastern. We have Kashkari talking. We have the beige book at 2 p.m. 10-year bond auction at 1, and then 10:30 crude oil inventories. Tomorrow we have core PPI. And then tomorrow we have FOMC Fed member Waller speaking. So, yeah, definitely not Powell level members, right? And plus CPI is way more important than that. All right. Can you please look at Apple chart? Okay. Happens in 30 minutes. Yeah, I don't care what Kashkari says, honestly. One, I don't take him seriously. And two, the important info already came out. So could we see a retracement? Yes. This right here on the 5-minute chart, these are all retracements, right? And I hoped that I had my trading platform up, but I was dealing with internet issues. Now it's up. It would be like, in general, these are retracements that you look for, right? Right here. Retracements into these imbalances, whether you use that, or whether you use something like a Fibonacci or both, which is what I use. In general, these are retracements that I would buy, right? But the S&P is up 0.9%. So I'd be very careful with where I take profit. Do you think SPY is going to rise as opposed to just stay still or drop? Yeah, I mean, the S&P is up almost 1%. Explain that massive wick on SPY at 8:03. Where? I'm on the SPY right now. Let's go to extended trading hours. I don't see a massive wick at 8:03. Is it time to buy call option on SPY? I think you're a little late, Jero. If you're going to do that, you should definitely do that. You should have done that yesterday. The 1 minute time frame? You want me to explain a wick on a 1 minute time frame? I don't see. This is 8:03 right here. Anyway, all right. Let's look at the NASDAQ real quick. The NASDAQ on days like this, by the way, is not as clean for me as the S&P, right? Like, you tend to see a lot of these wicks on the NASDAQ and a lot more violent price action. I want to check on Apple real quick because we are heavy in Apple bull put spreads. And we are now up. Nice. We are up 16% on these bull put spreads. I'm going to show you what I'm talking about. 17% now. So this is the bull put spread that we have on Apple. Oh, hell yeah. Super green today. We have the 187.5 put and 192.5 put on Apple. Obviously, we sold the 192.5 put and bought the 187.5 put. So this is a 5-wide spread. That is up 17% right now. Lucid drops massive. Yeah, we're out of Lucid, thank God. But this is our trade on Apple right now. Up 18% now. Hell yeah. Let me put this in the chat. 1 second. Up 18% on Apple bull put spread. Take profits if you wish. So we have a couple of weeks left to expire on Apple. But yes, on Lucid, these were up 355% yesterday. These calls, right? But we sold most at around 170%. So got out just in time. You can't keep your hand in the cookie jar for too long. I was going to get out of Lucid calls when the market open. Why are you still in them? I mean, you know what? Honestly, people are making a big deal. They're still hella in the money if you're in those seven calls. This isn't that massive of a drop. The way people were talking, I expected to open Lucid and see, it back down to 6. This isn't that crazy. It's down 4%. So you can still get out. Do you think banks will have good earnings? Yeah, I think every company will have decent earnings. Banks gapped up today. We bought XLF, by the way, somewhere down here. So we are up on X. This is one of the things we bought the dip on. Someone had asked earlier, if there are any, holy shit, 18% now on those Apple bull put spreads. 19%, sorry. Fuck. I'm hella deep in these. I wanna take some profit. Someone had asked me if there are any good stocks or whatever, right? Or stocks that are priced at value. Apple's up over 1% today. XLF was one of them, right? So we hopped into XLF somewhere down here. And we are nearing the top of this channel. And I was saying that there are some sections of the S&P 500 that we're still beaten up, and we will likely see a rotation, right? Because the S&P 500 is really driven by tech, right? So if you look at XLK, you can see XLK is at all-time highs. But if you look at XLU, which is the utility sector of the S&P 500, we still have a lot more to go. If you look at XLP, which is consumer staples, we still have a lot more to go. So there are sectors of the S&P 500 that are due for a rotation. Holy shit, 20% now on Apple bull put spreads. That is a lot of money. And by the way, if you guys want access to the Academy, all of our analysis, our stock picks, our options plays, our futures plays, day trades, etc., link is in the description below. It should be the first link in the description below. Make sure you sign up. Fuck, 21% now. Oh my God, these are just absolutely rocketing. These are just absolutely rocketing. 21% on Apple bull put spreads. Hell yeah. You'd love to see it. Hopefully it keeps going out. I would if I could afford it. Up to you, bro. I mean, or I put out, tons of content on YouTube, but watch Sound of Freedom. Spread the word. Oh my God, bro. Take it to your Facebook page. I was going to get out of Lucid, blah, blah, blah. Do you think we will have good earnings? Oh, do you think banks will have, what Fibonacci numbers do you use? Here are my Fibonacci settings. Conscious investing. Take it to your Facebook page. Fuck, 23% on Apple bull put spreads now. Man. Should I take profit on some of these? I do have a lot. I might take profit on a quarter of them. I have the 0.5, 0.786, and then I have the golden pocket between 0.68 and 0.65. 0.618 and 0.65. Can you show us an example of a trade? You want me to just jump in one? Like randomly, just to show you? Or what are you talking about, Astro Geek? PayPal, why is it dropping hard? Let's see. U.S. consumer lenders, payment COS up as inflation cools in June. PayPal's comeback, blah, blah, blah. U.S. consumer lenders, payment COS up. Shares of payment processors and consumer lenders rise. Well, not really. Well, I think this article was premature. It was up pre-market. If you see this is PayPal pre-market. I mean, it's still up. Why is it tanking from the top? Probably. Well, I can tell you for one, probably because, we're filling this gap and there's probably a lot of algorithmic trading around this gap. So it's just profit taking. I don't see any negative news here. Tesla dropping from pre-market. Yeah, but it's still up 1.5%. I mean, all right. It's probably Tesla looking at its best sales quarter ever. Tesla 4GM target raised. Yeah, I don't know. I think maybe because there's an expectation that the Fed is going to hike some more, meaning that there's pressure on interest rates on cars and houses and whatnot. I don't know. I mean, this is not like anything remarkable, right? It went from 276 to 274. When people type and they say, oh my God, this thing is dropping, I look at it and it's, one, the stock is still up. Two, it's benign, right? Oh my God, we're up 30% on Apple right now. Oh, 1 second. Up 30% on Apple bull put spread, closing half here. One second, just got to close half of these real quick. I'm telling you guys, first link in the description if you want to join. All right, let's close these. Let me close at 2:01. and I'm just going to let it sit there. All right, CLSK is on fire. I mean, yeah. Oh, someone said, can you take a look at Apple? The thing that I'm trading right now. Come on, fill me at 201. Fill me at 201. Hopefully I get filled here. I don't want to fill for higher. Any coupon codes for the Discord? Casey says. Casey, aren't you part of it already? Oh, no, I sent you a hat. That's why your name looks familiar. You want a hat, and I sent it to you. Any idea on Tesla? Idea about what? My friend, be a little more specific, please. Come on, bro. Fill me. Woo! All right. Got the fill. Apple. Yeah. I mean, this is the reason that I got into Apple in the first place, right? And I shared this pre-market, but take a look at the volume and take a look at the 21 EMA. Should I keep long position or should I sell? Bro, I don't know what your entry was. I don't know what you hold. I don't know what your cost basis is. I don't know what you're talking about, man. Please be more specific. Please. It will keep the chat flowing better. All right. So the 21 EMAs is purple line here, right? You guys know I don't use moving averages when I'm day trading. But when I'm looking at longer term swings, I use indicators that I would normally not use when I'm day trading, okay? One of them is the 21 EMA. Another is volume. I don't look at volume when I'm day trading, especially not on ES, because if you look at ES volume, which is the S&P futures, you'll see Lewis says short SPY. You want to short the SPY, you crazy mofo? Go ahead. Let me know how it works out. Lewis, I'm going to tell you something that hopefully sticks with you. Okay? More is lost trading against the trend than trading with the trend. Okay? If you're trying to find an epic reversal, especially on a news day, to me, that is insane. Could it reverse? Of course. How many times are you going to be right trading against the trend? Maybe 1 out of 20. You're much better off trading with the trend than trading against the trend. Oh my God, these Apple. Oh my God, this is going ham right now. If we get to 50%, I'm closing this entire position out. We're up almost 32% now on this. So if you're looking at the S&P 500 futures, the volume is so constant, right? This is why I don't look at volume, especially when trading futures, day trading futures. But when I'm looking at swings, multi-day swings, then I definitely look at volume, and I look at things that I normally wouldn't look at, right? Which, for instance, the 21 EMA, right? So in this case, someone had asked me about Apple, and I mentioned this before market open, but one of the reasons that I took Apple wasn't because of CPI. One of the reasons I took Apple was because, one, I have a 200 price target, right? I have a 200 price target on Apple, especially with Apple Vision Pro coming out. I do think 200 is a clean number, especially that it has gotten all these upgrades by banks to 200 as well. And I know how psychological levels work. I do think Apple will be 200 sooner or later, probably sooner. And we see this pattern where Apple hits a 21 EMA, pops on heavy volume, right? You see this volume here on these pops, right? And then when we get a retracement, Apple trails this volume. So we get heavy volume on pops and then trailing volume thereafter, right? Meaning that sellers are not as aggressive as the buyers on the pop. And you want to look for this pattern in general, right? This is one of the reasons why we took Lucid. So if you look at Lucid, sorry, not Lucid, Carvana, the other car company. I know they're one's an EV and one's a car seller. But when we got into Carvana, one of the reasons was because of this pop and trail. See, this pop and trail, including trailing volume, phenomenon here, right? So especially on stocks that have high short interest, by the way. Fuck, we're at 36% on Apple. If we get to 40, I'm closing out the entire position. Maybe I'll leave a runner. I'll leave runners. But if we get to 40%, then I will close most of the position here. I'm going to be monitoring this. Once Apple breaks over 194, it's hitting 200 not long after. Yeah, because 194.5 is its all-time high. But look out for especially stocks that have high short interest, right? Like Carvana did, like Lucid did. When you get these pops, you want to, if you are looking to speculate long, you want to get long on a retracement to something like the 21 EMA. Also, you want to look at trailing volume, right? You want the volume to trail at a much lower pace than the initial pop. And then once again, you get this pop here, right? And then look at the volume right after. It trails. And you can get in on at the 21 EMA. Again, this is just a speculative swing trade on stocks that have heavy short interest. I'm not saying buy Carvana for the long term. It's not like I believe in the company. But it did have an extremely high short interest. So that phenomenon is definitely in play. Rivian is cratering today. Yeah, but look where Rivian was. Rivian also popped. Like, you guys put this shit in perspective. Rivian popped 100% in 2 weeks. How to set the 21 EMA? Axel, get a free TradingView account. Go to indicators. Look up EMA, moving average exponential. Go into the settings and put 21 here. Now you have a 21 EMA. Okay? Oh my God. We are at 40% on Apple. I'm going to leave the half that I have. I want 100% on this trade. And if we get above 192.5, let's see, where's Apple right now? Oh, we're at 191.5 on Apple. Hell yeah. If we get above 192.5 within the next week, these will be next to 100%. I'm going to let this run because I already took profits on half of the position. So I'm happy with this. All right. Shoo. Bro needs a cup of coffee. I do have coffee. You know what happens? Lewis? Well, Lewis says chill, bro. What happens is I'll put the cup of coffee and then when I'm live streaming, and then I'll just let it sit here, right? And then it gets cold and then I get cranky. Oh my God. 40% now on Apple. Take profits if you wish. Expires on July 21st. Looking to hold until at least next week, but take profits if it's good. All right. Love when Z gets frustrated with elementary questions. Bro, you have to admit, sometimes people will say, like, should I hold my position? And then they won't tell me anything else. Should I hold my longs? They won't tell me anything else. They won't tell me if they're trading options or futures or stocks. Or sometimes they won't even tell me what stock they're trading. Though that's just the question. Should I hold? Z, can you give a look? Can you take a look at RTY and run through your checklist real quick? All right. Lucid down 10%, Kevin says. Bro, I'm out of Lucid. I'm out of Lucid, Kevin. It's okay. It can be down 1,000,000%. It's all right. RTY. Ooh. Let's see. Where did this stop out at? I would like to see RTY sweep liquidity a little more convincingly. I need to know where this levels. This does look like a liquidity sweep, but let me look at where this level represents. It's got to coincide with something. This right here. God damn it. Yeah, I mean, this is a tough one, Clickster. You can short this. I would be very reticent to short on a day like today. Especially since this looks like internal liquidity has been taken here, right? Right at support, which in general would make me very reticent to short, right? In this case, I would actually be looking for longs on a pullback back to these equal highs. This internal liquidity here doesn't give me comfort to short that, right? Should I hold long and short liquidity? I hope you're kidding, Brandon. I have no idea what you're talking about. Should I hold long and short liquidity? I have no idea what you're talking about, bro. This is what I'm talking about. I was just talking about this. I have no idea what you're talking about. Is this a pullback for Apple? Bro, Apple's up 1.5%. Of course there's going to be a pullback. Like, of course. Well, you just expect every candle to be green for the end of time? Of course this is a pullback. If there were no pullbacks, then I wouldn't take partial profits. Right? Like, if I just expected Apple to keep running in perpetuity, why would I take partial profits? Of course stocks are going to pull back. Long on Tesla pulled back to golden pocket on the gap up today. It depends on where you're drawing the golden pocket from. Here's how I would do Tesla. So you have your, obviously, pre-market high. This was when CPI came out, right? So take this with a grain of salt. You also have the pre-market low, right? Right here. And then you have this range, which before the CPI pop, this was the pre-market high on Tesla. So these levels are important. Let me remove this ugly ass 21 EMA real quick. Right? So we are seeing right now support at that line, which was the pre-market high before CPI came out. Right? And this here looks like what? These look like liquidity wicks, right? So I want to see, I wouldn't short Tesla here because obviously we don't have a market structure break. We did get bullish news today. Like shorting, obviously the market can flip. We've seen this before. Okay. I'm not saying it's impossible for the market to flip. If the market ended red today, I wouldn't be surprised. If it ended green today, I wouldn't be surprised, right? The market can see the initial reaction is not always the right one. Okay. I still think that what came out today, especially on core, is a bullish narrative. So, you know, I would expect the market to end green, but if it ended red, I wouldn't be shocked either. I've seen like much crazier things in the market. But am I betting against a bullish trend? Not, I wouldn't. You know, I would need so much more confirmation for that to happen. So in this case, if you're looking at Tesla, I'm not looking to go short here. I think you did mention long. Yeah, you could certainly long. You do have an imbalance here, right? That ended up pre-market. You have this level here, which was the pre-market high before CPI, pop, right? You could definitely take a long from this level here, for sure. You know, I would be worried about this imbalance here. But yeah, I mean, it's not an optimal long, especially when you're trading options. Because of this imbalance, you're going to need to take profits fairly quickly, in my view. If you're day trading, not talking about, you know, multi-day holds or whatever. But yeah. All right, let me take a look at the ES real quick. So there was one optimal long for me on ES, and it was the one that I had pointed out earlier. I didn't take it, but this is the one that I pointed out earlier, right? I think it was, yeah, it was this. With this imbalance, the Fibonacci right here, this was the one that I would be interested in. I think you could still long ES, but in this case, because we're up over 1%, you're going to have to start thinking about taking profits pretty quickly, right? When do you think is a good dip entry for Lucid? I don't, bro. I don't. Lucid for me was a speculative play. I don't believe in the company. I don't, you know, particularly think that they're well positioned in the market. I think their delivery numbers suck. Their production numbers suck. I think it's very hard to scale a car company that doesn't have a ton of demand, right? So if you look at Lucid market share, it's abysmal compared to even, you know, companies that aren't pure EV, obviously, Toyota, Ford. You know, I bet you even compared to Audi, right? I bet you Audi sells more EVs than Lucid. Peace, Alex. Have a wonderful day, bro. Thank you for joining. Appreciate you. Thank you. So yeah, I'm not really interested in the reason that I got in Lucid was because the calls on it were cheap, right? Because people weren't jumping in. So when people are asking me about Mara, take a look at how expensive Mara calls are, right? Because now everyone is jumping in. So those calls have a very high premium. When we bought Lucid, I'll show you when we bought it actually. Here, let's take a look at this. when we bought Lucid, and by the way, everyone was asking me, not everyone, there were a lot of people asking me about Lucid when I bought it. They're like, oh, should I sell for a loss? Blah, blah, blah. Is it still good? We bought Lucid June 21st. We bought these calls for 27 cents, right? They ended up running to $1.30. Obviously, they're down today, but they ended up running to $1.30 as of yesterday. We bought them for 27 cents on June 21st, right? When you have a thesis, hopefully you can formulate a thesis before before, you know, there's FOMO, right? So this is where we bought the Lucid calls. There was no activity in it yet. It was just a sleeping stock that no one paid attention to. And the reason I bought it was for a few reasons, right? Historically, this level was support going back to December of last year, right? And then obviously calls were cheap. And then I took a look at Lucid short interest, and it was insane. The days to cover on Lucid was the highest ever, right? It was 10 days to cover on Lucid. Days to cover means if you go short and the stock rallies based on the volume and the float, how quick would it be to cover your short position? 10 days is really long. This means that, you know, there's high short interest compared to the float. And this means that institutions are likely shorting this like crazy. So, you know, because of that, I thought that any spike we would get in Lucid, and because we were obviously on the cusp of a junk rally, you see like all of the ARK stocks climbing. You saw Rivian climb. You saw every EV climb. NEO was climbing, right? So because of all of that, I'm like, hey, 27 cents is a cheap speculative play on Lucid, right? That is when you want to get in. You don't want to get in after a pop, at least not with naked calls. At least go in with like a vertical spread or something. If you just buy naked calls, you're buying the most expensive, riskiest type of play on a stock that has already made a move, right? So killer trade on the Apple spread, Z, taking off for now. Keep killing it. Appreciate you, Melly. Have a great day, and thank you for joining me. Appreciate your time, really. Every single person that's watching this, I really appreciate you even taking a minute to watch this. So thank you, guys. And leave a thumbs up on your way out. All right. AP, shall I hold? Oh my God, you guys are trolling at this point. What's your take on you, stock operator? With a name like stock operator, I would appreciate a more specific question. What's my take on you? What? As a company, its balance sheet, its growth potential, its options, its chart, day trade, swing trade. Please give me more, bro. What's your take? Oh my God. Yo, Z, what are your thoughts? Oh my God. Diraj Patil, thanks for the session. Back to work. Appreciate you, man. Have a good day at work. Have a great day at work. Z's about to have a heart attack this morning. More like a brain aneurysm. My heart can take it, bro. It's my brain that's about to explode. I love y'all. I hope you know it's in good fun. I'm just playing with you. What are your thoughts on thoughts? Oh my God. All right, here's my thoughts. Buy calls. Buy calls on everything, okay? Buy call. I want you to liquidate your 401k, take it over to Robinhood and buy calls on everything. There's my thoughts. Buy calls on Mara. Buy calls on. Nah, let's pick the worst stock of all time. Actually, no. I want you to short the entire market. That's what I want you to do. YOLO Tattoo Chef. Yeah, let's see. Tattooed Chef. What? Tattooed Chef was delisted? Shut the fuck. This was the company that everybody was, all the internet geniuses were telling people to hold? Oh my God. I swear to God, I did not know that. I don't pay attention to stocks like this. I swear to God, I didn't know that Tattoo Chef was delisted. It is now an OTC penny stock. 10 cents? Oh my God, bro. This is crazy. This was the company that wasn't like Kevin and what's the other dude's name? Jerome? No, what's his name? Jason? I don't know. Kevin and Jason, weren't these two like all in on this stock? Jeremy, that's it. I knew it was a J. Stock Mo. RIP, bro. RIP to that portfolio. 10 cents? This shit was trading at like $30, wasn't it? Anyway. Wow. What is Beyond Meat doing? Oh my God, Beyond Meat's actually doing well. Well, comparatively. They were trading. They're not doing well comparatively. They were trading at $220 and they are $16 now. But I did see Beyond Meat actually had a high short interest too. I thought there would be a potential pop here, but I wasn't looking too much into it. Little Kev out of Ventura was into Tattooed Chef. Ventura? That's where he lives? I don't know, bro. I mean, look, you guys know, if you've been with me long enough, like there was an era where penny stocks were the shit, right? Like you could buy penny stocks for sure. In 2020, like penny stocks were going up to $5, $10. You guys remember what was it? What was that? That bio company. What was that called? Bingo, I think. Bionanogenomics. You guys remember this, right? Like there was a time when you can buy this shit. Bionano went to $15, bro. This was trading at a quarter and it went to $15. Those days were amazing. So of course, yeah, during that time, it made sense to trade this stuff. But going all in on these companies, my God, bro. Sesson, I traded. That one's probably delisted now. Yeah. Is the VIX broken now because of zero DTE options? No, bro. The VIX is not broken. Why do people keep saying this? Why do people keep saying the VIX is broken? Like, what would cause volatility now? Right? Put call ratio is at a historic low. What would cause volatility now? Inflation is at 3%. Unemployment is historically low. Company earnings aren't too bad. And we'll check, obviously we have earnings coming up next week, starting earnings season for Q2 2023. What's going to cause volatility to spike? Tell me. The VIX is not broken. People just were short the market. They wanted the VIX to spike. They are also looking at the VIX only within the context of the high inflationary environment that we had. Right? Look at the VIX before COVID. The VIX routinely trades 10 or below. This is normal for the VIX, right? As a matter of fact, in 2017, the VIX was trading between 8 and 9. My God, bro, stop posting this question over and over again. Someone is spamming the chat with their one question. Do you have an opinion on TLT 20-plus year treasury? TLT is a long-term bond ETF, okay? It's in the name, 20-plus year treasury. So, of course, it's based on 20-plus year bond yields, right? Long-term bond yields are not affected as much as short-term bond yields by interest rate policy, okay? When bond yields go down, TLT goes up. So if you are expecting bond yields for some reason to go down significantly, the long-term bond yields, that's when you want to buy TLT. What other reason do you want to buy TLT, Mark? And why would you expect bond yields to go down? I believe that you can buy bond ETFs when the Fed is close to done hiking. You can buy it now if you want. It does pay dividends. You can dollar cost average into TLT. That's perfectly fine. But the reason that TLT was trading up here was because bond yields were zero, close to zero. That's why TLT was trading up here. Right now, the Fed funds rate is above 5%, right? So, yeah, you could dollar cost average into it if you wanted to, but you need bond yields to drop significantly for this to go up because there's an inverse relationship. Under Armour, City View System says, I have it as a swing, potential PT and SL, please. Where did you get in, bro? I have no idea what your trade is, so I can't tell you what is PT and SL. Like, how would I tell you what a stop limit is if I have no idea what your entry is? All right, let me take a look at the broader markets. In at 745. I mean, honestly, City View Systems, why would you enter a trade if you don't have an SL and if you don't have an SL and a take profit already ironed out? Like, why are you entering the trade? You should have these things ironed out before, bro. Not after. 745 is not a bad entry technically. Probably look to take first I have no idea what Under Armour short interest looks like. I have no idea what its earnings look like. I have no idea what its potential earnings are like. But this right here is a support resistance flip, right? It used to be support, now it's resistance. I would potentially take first profit target here. That's where I would, potentially take, if I was in the trade, that's where I would take it. And I would move my stop limit to my entry, actually. Your entry is right here, right? So I'd move my stop limit to my entry. If this was a swing trade, I wouldn't want to lose any more money on this trade or any money on this trade. And now, if you move your stop limit to your entry, then you're writing a free trade. You already took partial profits here, right? Which, I mean, you're up a nice 7% on your trade. So I would take partials here, set stop limit at my entry at break even, and then just let it ride and see what happens on earnings. Otherwise, I have no idea. I don't know much about Under Armour's health as a company. So I don't have my finger on the pulse of Under Armour, right? Like, I don't know if it's underperforming, if it's not growing. I don't know if it's in debt. I don't know what its cash flow looks like to know what happens on earnings. But that's what I would do. Now you're in a free trade and you're not worried about losing money. But have this shit iron out before you enter a trade, not after. Are we in a bear market rally? No, this is a bull market. Would there be a recovery in SOX S? Dude, there is no recovery in SOX S because SOX S is a leveraged ETF. Right? It's a leveraged ETF. This is not a stock. So take a look at SOX S, right? Why was SOX S trading at, what is this? $10,329,627. Why was it trading at that? Because it's an inverse ETF, meaning it's designed to go down over time. This is what it's crazy about, apps like Robinhood. The fact that you could just open an account and start buying stuff that you don't understand is wild to me, right? This is meant to go down. This is why, it was trading at $11 million. It wasn't really trading at $11 million. Inverse ETFs have to do reverse splits every time they get low enough, right? Because they have to stay afloat. If they didn't do reverse splits, this would be worth $0.000001, right? Because it's an inverse ETF. So the more that a stock goes up, an inverse leverage ETF is going to go down disproportionately. And it can only go down because, logically, it can't go down to zero. It's going to keep going into decimal oblivion, 0.000000. So it's asking whether SOX S is going to recover. I hope you're not holding it. What's your name? Sorry. Max. I hope you're not holding this because this is not a stock. This is an instrument to play very, very, very short dated shorts on an ETF. In this case, it's the semiconductor ETF, right? SOX S is the inverse of SOX, SOXX. And if you look at SOXX, and you look how it has performed since October, it's just a straight line up. If you look at how SOX performs long term, it's just a straight line up, right? Since 2008, this is SOX. This is why SOX S is just on a downward slope. So you don't want to hold this stuff. There is no recovery on SOX S because it is not a stock. So hopefully you're not holding this. Can we look for trades? Yeah, bro, you could do whatever you like. Someone said NASDAQ pullback. Where, bro? Where? Where's the NASDAQ pullback? I don't see that. People are so hyperbolic. All right. This is why I was telling whoever earlier, do not short. Like someone was looking to short this. That's just insane. I there's no way that I can trade this right now because, unless you had bullish plays beforehand, which we did on Apple, unless you have, bullish trades beforehand, trying to jump in here is just insane, right? Like if you pull up the 1 minute, you can potentially scalp here, right? But looking for long-term day trades that are more than just scalps, it's very hard after a market is up so much, right? ES, I think, is probably going to be a little more opportunistic than NQ. So the S&P 500 versus the NASDAQ. You're probably better off looking at individual names, right? It's like I'd be interested to see what Tesla does here. Especially after taking this liquidity. Do you teach day trading from scratch in the academy? Yes. Also, this is running right now. The signups are closed for this, but we will be opening up wait lists for the next one, which will be in the fall. Right now, we're doing our summer mentorship program, where it's a class of less than 20 students. We actually had our first session yesterday. It was extremely productive, super dope. It's a very, very small class, so everyone gets to ask their questions unabated. But we went through phase 1 yesterday. But it's technical analysis, trading. We get into options and futures. It's 4 main phases. Basically trying to teach people how to trade from A to Z. Starting off with the most basic technical analysis, running through in a logical, chronological pattern, taking you through a trading journey, right? And the goal is obviously to fast track you. Random card breaks. Love the mentorship. Appreciate you, man. The recording should be up today, by the way. You will get sent the recording. Tesla looks like a long. Yeah, it does look like a long. Let me pull up VWAP real quick. And I use this anchored VWAP, this auto-anchored VWAP. So we have VWAP, we have the gap here, and we have the golden pocket. Now, this thing does scare me a bit, right? The fact that this imbalance is so large. So I wouldn't take a large position. How much is it? It's the signups are done, bro. We did signups for like 2 months. So, and we selected 15 people in this class out of over 1,000 that had signed up, right? So yeah, anyway, this position would be small for me. Your position size also has to be dictated by your confidence in the trade. You guys are so lucky to be in the mentorship. Yeah, we're going to open another one for the fall, for sure. So we're going to be taking signups for that pretty soon. But Tesla, I would be, I would potentially long here, maybe the 277.5 calls. Hoping to take profit at this area here. Right? So it's a very, very short trade. How's the CPI come out? CPI already came out, bro. CPI lower than expected. 3% versus 3.1%. All right. Some people were asking me for discounts on the membership, not the mentorship, but the membership. We don't have any at this time. So, and I don't know when we're going to do the next one. But it's the first link in the description. Make sure that you sign up and book a call with our ambassadors to apply for the membership to the academy. But yeah, right now we're not running any discounts. So And I'm not sure when we will next. Francis says, thanks, Z, for the mentorship class yesterday and for this morning. I'm learning now. Appreciate you, Francis. All right, so we're seeing a potential. Let me see on NVIDIA whether this represents. Oh, my God. This is NVIDIA. This is, they hit their resistance for their all-time high, right? These equal highs here. This represents NVIDIA's all-time high. Why is PEX NY up a couple? I don't even know what that is, Roland. You know, asking why a random stock is up. I mean, who knows? There's pump and dumps. There's I don't know. I don't know what that is. I don't even know what that stock is. Pexney? Yeah, I don't know what that is. But I'm sure you can research it. So this right here represents NVIDIA's all-time high. So we could get a new all-time high in NVIDIA today, by the way. And no, I wouldn't be looking to short this. That's just nuts. I'm looking to see if there's a significant pullback. NVIDIA's up 3.2%, right? 3.2% is much higher relatively than the market. So NVIDIA is showing extreme relative strength today. So you don't want to short these names. Can we look at the yield inversion? Yield curve inversion. Ten-year, 2-year spread. Yeah, I mean, what do you want to know about it? We hit the lowest level since 1981 last week, and now it is flattening again. So we were at negative 1.08, and now we are at negative 0.89. I mean, yeah. All right. Oh shit! It's almost 10:30 Eastern time. When do you think it will start moving the other way? Or what's the other way? Up or down? Down? You mean like more inverted? I mean, I think this is right around where you'd expect it to before a recession. Where would you buy QQQ and VU for investment? Months ago, bro. Right now, I mean, you're dealing, you're 8% away from all-time highs. So you can buy it now if you want. Is it optimal? No. Same as VU, right? 7% away from all-time high. Just 101 shares in SOX S, Finicel puts. Why, bro? Why? Look at NVIDIA. Look at AMD. You want to short this right now? We might get an all-time high on AMD, a new all-time high. Yeah, that right there is liquidity. Yes. And remember what I said. This is why I'm not too keen on longing Tesla here. And if I did, it would be a tiny position. Any suggestion on a good volume bar indicator? I don't use volume in my trades, so I couldn't tell you. Microsoft is just laddering up, same as Meta. All right, I'm gonna go and trade with the Academy. But appreciate you guys for joining. Again, on the way out, hit that thumbs up. CPI came in 3% versus 3.1. Core came in at 4.8 versus 5. You should remove your small percentage hedges of SQQ, SDAO, SPXU. I don't know how much you're hedged, bro. I don't know what your portfolio looks like. It's completely up to you. But appreciate you guys. I will be on the Academy right now. So for those of you in the Academy, I will see you in there. For the rest of you, appreciate you. Thank you so much for joining. Sorry for the technical difficulties in the first half hour. We were streaming from my phone, but all resolved. So leave a thumbs up on your way out. Try to get this to at least 400 so that other people find it after the stream. And yeah, join the Academy if you want. First link in the description below. Make sure that you book a call with the ambassador, and that way you can get access to our real-time analysis, alerts, chats, etc. Our chat's going ham this morning. So I will see you guys who are in the Academy. Otherwise, we will keep live streaming. So look out for updates on live streams. But appreciate you guys. Thank you so much. Peace.